Hello, and welcome to Top 10 Count, the channel that uncovers the secrets behind the world's most exclusive financial strategies. Today, we're pulling back the curtain on the investments that separate the ultra-wealthy from everyone else. This isn't about stocks you can buy on Robinhood. This is about asset classes with million-dollar entry points, secret handshakes, and returns that rewrite the rules. If you're ready to think beyond the market, hit that subscribe button right now. Your journey to financial mastery starts here. Number 10. Private equity. The ultra-rich don't just buy stocks, they buy entire companies. This is the world of private equity. Private equity firms raise massive pools of capital from high-net-worth individuals and institutional investors to acquire private companies or take public companies private. Their goal is to restructure operations, cut costs, and increase profitability over a 5 to 10 year period before selling for a massive profit. The attraction for the wealthy lies in the illiquidity premium, the extra return they get for locking up their capital, and the potential for outsized double-digit annual returns that are largely uncorrelated with the public stock market. While a typical investor is focused on a company's share price, the private equity investor is an owner, a partner in a multi-billion-dollar turnaround. Number 9. Venture capital funds. You've heard of companies like Uber, Airbnb, and Slack, but if you waited until their initial public offering to invest, you missed their explosive growth. The ultra-rich had access to them while they were still private. This is the domain of venture capital. VCs invest in early-stage startups with high growth potential. It's a high-risk, high-reward game where a single successful investment, or unicorn, can generate returns that more than compensate for dozens of failures. For the ultra-rich, venture capital offers a chance to get in at the ground floor, diversify away from public markets, and shape the future of technology and innovation. It's not just about money. It's about having a seat at the table where the next Google or Tesla is being built. Number 8. Hedge funds. Forget what you think you know about hedge funds. While some use simple long-short strategies, the real secret is in their flexibility. For the ultra-rich, hedge funds are not just about beating the market. They're about absolute returns, regardless of market conditions. These funds use complex, sophisticated strategies, from global macro to quantitative trading and event-driven tactics, that are unavailable to the average investor. They can short stocks, use derivatives, or trade in a way that minimizes market correlation. The steep 2% management fee and 20% performance fee is the price of admission for access to these elite managers, who are tasked with delivering consistent, uncorrelated returns, serving as a powerful diversifier in an already complex portfolio. Number 7. Private credit. When companies need to borrow money and can't get it from a traditional bank, they turn to the private credit market. This is a multi-trillion-dollar industry where private funds directly lend to businesses, often at much higher interest rates. The ultra-rich are the lenders. This asset class has exploded in recent years, driven by bank regulations that have made it harder for banks to lend to certain companies. For wealthy investors, private credit offers a higher yield than traditional bonds, typically with floating interest rates that protect against inflation. It also provides a steady stream of income that is largely insulated from the volatility of public stock and bond markets, offering a predictable, durable source of returns. Number 6. Litigation finance. This is an investment that has nothing to do with stocks, bonds, or real estate. Litigation finance is the practice of investing in legal disputes. An investor provides capital to a company or individual to fund their lawsuit in exchange for a portion of the settlement or judgment if they win. Think of it as a specialized type of private credit for the legal world. For the ultra-rich, litigation finance is attractive for two main reasons. First, the potential returns are staggering, with some firms reporting annualized returns in the double digits. Second, and perhaps more importantly, these returns are completely uncorrelated with the wider financial markets. A legal case's outcome has nothing to do with the S&P 500, providing an exceptional hedge against market downturns. Number 5. Luxury real estate. This goes far beyond just a second home. The ultra-rich invest in prime, trophy properties not just for a lifestyle, but as a strategic asset class. We're talking about penthouses in Manhattan, sprawling estates in the Hamptons, or even entire luxury resorts. These properties often hold their value better during downturns because wealthy buyers are less affected by market volatility and interest rate hikes. Beyond simple capital appreciation, they can be a source of significant rental income, a haven for global capital, and a tangible asset that provides an inflation hedge. This is about investing in scarcity, unique locations, impeccable architecture, and a brand of exclusivity that cannot be replicated. Number 4. Fine art and collectibles. From rare paintings by an old master to a classic Ferrari, the world of fine art and collectibles is a cornerstone of ultra-rich portfolios. These assets are a hedge against inflation and a store of value. Their performance is not tied to the stock market, providing a valuable source of diversification. For the ultra-wealthy, it's a dual investment. They get the personal enjoyment and cultural prestige of owning a unique piece of history, all while holding a physical asset that has the potential for significant long-term appreciation. The high-end art market, in particular, has seen massive growth and can provide incredible returns for those with the capital and expertise to access it. Number 3. Timberland and farmland. The ultra-rich are increasingly investing in tangible, productive land. This isn't just a quaint hobby. It's a strategic move into a core asset class. Farmland and timberland offer a unique combination of income generation and capital appreciation. A well-managed farm produces crops, and a timberland generates income from the growth and sale of wood. Both have a low correlation to traditional financial assets, making them an excellent diversifier. More importantly, these assets are a powerful inflation hedge. As global population and demand for food and lumber grow, the value of productive land is expected to rise, creating a reliable, long-term store of wealth that is resilient against market shocks. Number 2, co-investments. When a private equity or venture capital fund makes a major deal, they often allow their largest investors to co-invest alongside them. This means the ultra-rich can put their capital directly into a specific company, avoiding the high management fees that come with a typical fund. Co-investing offers a level of access and transparency that is unparalleled. It allows the wealthy to cherry-pick the most promising opportunities from a fund's portfolio and deploy significant capital into a single, high-conviction bet. While it requires deep relationships and a significant minimum investment, it is a highly coveted strategy for maximizing returns and minimizing costs. Number 1. Specialized private funds. The final secret is what lies behind the first 9. The ultra-rich have access to hyper-specialized funds that focus on a single niche area, be it a fund dedicated to aircraft lease financing, distressed corporate debt in a specific region, or even music royalty catalogs. These funds are often closed to all but a handful of investors. They are built on deep proprietary expertise and offer an investment thesis that is completely unique. These highly illiquid, highly concentrated bets are the ultimate form of diversification, offering the potential for exceptional, outsized returns from sources that are simply off-limits to everyone else. From private credit to timberland, these investments prove that the ultra-rich don't build wealth by following the herd. They do it by accessing exclusive, illiquid asset classes that most people don't even know exist. This isn't about what you can do today, but what you can aspire to do tomorrow. Which of these investments surprised you the most? Let me know in the comments below. Don't forget to subscribe to Top 10 Count and hit that notification bell so you never miss another exclusive financial insight. Thank you for watching.